Hello and welcome back to Generational Growth Investing. Today we're going to give a portfolio update. It is May 26th, and one disclaimer, this is not financial advice. I just wanted to show people what a dividend portfolio can look like, how it's going for me, and just to try it out. This is probably best as part of a larger strategy, not doing only dividends, but I wanted to show how the portfolio is doing and how it's going. And then we're going to talk a little bit about some of the philosophy of dividend income investing as I understand it today. But, anyways, so here in this Google Sheet, I've been tracking all the dividends that have been coming in. We've had this a year and 1 month so far. Our very first month was $9.05, April of last year. So this April, we brought in $550, and surprisingly, it's jumped even more this May. I think it was part of selling SCHD last month, and I bought more XPAY. XPAY has been doing good, so that'll probably be in the title. So far in May, May is not quite over yet, but I thought we were just going to get $600, but just putting a lot of things in XPay, I think so far this May, the dividend account has brought in $702 in dividends just in May, and May is not totally over yet. So that's amazing. So our new goal will be to see if we can hit $800 next month. We'll see if that happens, but 702 this month so far. This brings our yearly total for this year to 2,476. And going down to the little charts here on the left is just the total for the year. So we want to go up and to the right. And then this is the total month by month every month here on the right. And so we started 2 Aprils ago now with $9. And we hit our first $200 last August. We did have some months that were kind of anomalies because we were doing some risky stuff, and we stopped doing that. We're still going up into the right, so you can see last month was 552, and this month $702. This was updated just a couple days ago, so it's not perfect on what it is as of making this, but I try to track some of the returns each time I make a video. And so you can see XPay. Anyways, XPay is on the right over here. And XPay is actually, up in the green, almost 2%. And almost everything is up and to the right. It's just been amazing. Even my really safe ones, Claws, J Triple B, J Triple A, are either in the green or basically zero, which is partly what I expect, but they're still like Claws is a pretty big holding of mine, and it's also in the green, which is just really awesome. ASGI back up 3%. GPIC is up 9% right now. QQQI is up 7% since I've held it. Like, this is just really popping off. And keep in mind, so this 9% in the gain is on top of what is GPIC, about 14%. Oh, sorry, GPIC 10% annual yield. So if it went up 9% in 1 year, plus the 10% annual yield, that's going to be 19%, which is just awesome. But anyways, yeah, this is the last reading I had, and some of these up 5%, 5%, 7%, 9%. Yeah, just everything sort of swinging back up pretty much. CSWC just kind of staying flat, and that's that. Also, SPYT is basically zero now, so that means our final is $739 we've brought in, and we'll get another $100 in a few days. So this is almost $1,000 in a year of holding this. Doing great. And I have bought more XPAY. XPAY is a 21% annual yield, and it's basically flat, but it's actually up in the green, about 2% right now. I've been buying more XPAY, which is probably why this dividend income is just continuing to skyrocket. It's been incredible. We got over $700 this month. If everything keeps going, next month probably hit $800. Let's do a little calculator here. This is kind of fun to just look at, where we're going. We're not going to do the compound interest calculator right now, but also another good way to stay inspired. But so we just had our first $700 month. So I'll do 700 times 12 months. Should be $8,400 per year, which is pretty good. We can kind of make maybe a new goal to get $10,000 in 1 year. So we did 900 times 12 months. So we need to get closer to $900 a month, which I think we'll easily be able to do by the end of the year. We're halfway through the year, basically. So what are we looking forward to getting the rest of the year? 700 times 6 is 4,200 plus the amount we've already brought in, 2476. So we could plan, either way, we can plan for bringing in another $4,000 this month or for this year with a total of 6,600 ish. We'll definitely come close to $7,000 this year just in dividends. And let's go over the philosophy. And one more thing. So if we're at $700 a month times 12 months, we can also do divided by 52 and see we're bringing in $160 a week if we wanted to look at what could I spend on the weekends? Or I think another fun way to do this is divided by 365 and really see what am I bringing in a day. $23 a day is how I could kind of look at this if I wanted to. Now we're looking at lunch every day being covered, or on the weekends. That's why I like looking at, if I take my total for the year and divide it by 52, that's basically what I could spend every weekend and stay even. So, wow, I could spend $160 every single weekend, and that's just money that's getting from all this compounding and the money that I'm putting into this. This is that passive income that I want to get while I'm doing nothing, right? Or I could spend $700 at the end of every month doing something that I want. Or, as you guys can see, this is basically a car payment at this point. Now, our goal, really long term, is to get to that $1,000,000 and times our dividend. We want to get to $100,000 per year to replace an entire income to live off of. We want to be able to pay rent and everything with this. So, definitely on our way. And this is our main graph, just going up and to the right, which is exactly what we want. So that's the update, and I'll make another video at the beginning of next month where we'll finally get our total, but I've been buying a lot of XPAY. So next, I just want to go over some more of the philosophy for this. Again, some of these videos are really just to inspire you, inspire friends of mine, so they can maybe see could they start to incorporate dividend investing, dividend income. Some people, there's big debates online. Some people think this is only something that you do once you're retired. It's only something that you need to do, you know, once you've done regular investing, let's say growth investing, and you've hit $1 million, then you switch to dividend investing. So I'll really leave that argument out there for now. Mostly, I've said this should be part of a larger strategy. As someone who was kind of on the sidelines observing debates and observing dividend investing, I'm the type of person I wanted to see it for myself. I wanted to see, does this actually work? How risky is it? Um, if I were to get to a point where I'm retired, it would be hard for me to feel comfortable if I had $1 million to switch it over to this totally new strategy that I've never done before. It would feel scary. And so I wanted to at least dabble in this so that later in life I would be familiar with it. Imagine investing your whole life and then you're 60 and then they say, "Okay, time to totally change your strategy." Like that would not bring a lot of peace of mind. So that's one reason that I'm doing this. Um, but as far as the philosophy, some of this is, you know, this isn't all brand new. It's all about having assets that pay. So I'm just going to read this. This is kind of a summary of the idea of buying assets that bring in cash flow. And there are different ones. We've talked about there's real estate, side hustle type things, affiliate marketing. There's different ways to bring in, or there's doing things like making music or writing books, selling things that bring you royalties for the rest of your life. I mean, if you wrote a book, put it on Amazon Publishing, and you sold 30 copies every month for the rest of your life, there's some passive income. You had to put in the time to write the book. Anything with royalties is kind of like that, and you put in the time up front. That's not a bad idea. Um, Real estate could maybe make more money. I do not feel like it's so passive. I mean, even if you buy a management company to handle things like with the real estate rental properties, you're still dealing with the management company, and everyone's personality is different if they want to put in that work or stress or whatever. I feel like this dividend strategy is the only thing that can be that truly passive income. And it's the other nice thing is the principal that I have put in. So, okay, I'm $700 a month now. That's great. Obviously, I'm not spending it, I'm just buying more funds with it. But also, there's a principal in there, right? And I can get that back. I've dabbled in like internet side hustle things before where you're getting like the Shopify account and you have to put up money up front and you're paying money, $30 a month, $60 a month to run these websites, and sometimes you have to buy merchandise up front. And if your side hustle doesn't work out, you don't get that money back. You're so with this, yes, all investing you can lose money, but essentially, I mean, I'm up on everything, and even if I just did these really safe investments like J Triple B, let's say I get $10,000 in there. If I ever want that $10,000 back, I just sell the position, and I didn't really like lose it. So let's go ahead and read this. For the second part of this video, I'm going to read this philosophy on dividend, passive income stuff. And again, I'm just trying to show that this can really work. So, Rich Dad Poor Dad is not the only place that this comes from, but it's just an easy reference. So this says, combining the core thesis of Rich Dad Poor Dad With the classic dividend, growth investing creates one of the most powerful wealth building engines possible. Rich Dad Poor Dad defines an asset strictly by its cash flow. If it doesn't put money back into your pocket, it isn't an asset, it's a liability. Dividend investing takes this philosophy and applies it to the stock market, allowing you to buy fractional ownership in blue chip companies that pay you for just holding them. Of course, I mostly do funds. All these are basically funds, they're not companies in themselves. Different strategies for different people. It's fine. Uh, let's keep going. Here's what combining these two theories, here's why combining these two theories is not just smart, it is life changing. Why you must start immediately. The power of early execution, that's for sure. Immediate ownership of cash flow. Unlike real estate, which requires massive down payments. Oh, yeah, another comment on real estate. I mean, usually you're doing real estate with debt. You don't have to. You could buy a house for cash. But typically, you do it with debt. Now, you can do dividend investing with debt as well, which is, I mean, something I've sort of looked at. Not sure how smart it is. That's kind of a topic for a different video. But typically, you're still buying these real estate properties for debt. And so, like, how long does it take you to break even? 20 years? Anyways, these are all debatable things, and it's kind of to each their own in the sense that I strongly believe investing has more to do with, like, your personality type than anything else. But let's keep going. Um, Unlike real estate, which requires massive down payments and debt, dividend investing allows you to buy cash flowing assets instantly. For the price of a dinner, you can own a piece of global enterprise that pays you cash. Very true. I want the cash. The snowball starts small but generates velocity. Early on, your dividends might only buy a fraction of a new share. But through dividend reinvestment plans, that's called DRIP. If you hear DRIP, that's what it is. Those fractional shares generate their own dividends. You are weaponizing compound interest by forcing your money to, it's a weird word, this is ChatGPT, by the way, to breed more money. This is the snowball effect. Time is the ultimate multiplier. In dividend investing, time does heavy lifting. The sooner you start. Companies with a history of increasing their payouts compound your income on two fronts. First, the share price grows, and secondly, the cash payout increases every year. Starting early lets this dual compounding run for decades. It destroys the income versus wealth illusion. Most people trap themselves by working for a high salary while accumulating liabilities. This is what you need to avoid. Expensive cars, larger houses. Starting the dividend strategy immediately shifts your focus from how much you earn to how many income producing assets you have. Every time I look at buying something, I think, well, I could put it into my dividend strategy, and then over time, it will pay me back. And this does take a long-term perspective, right? A lot of people only think, what's happening a month from now? What's happening this weekend? This takes a mindset shift to what's happening 2 years from now. What's happening 5 years from now. The people who are successful at investing, they not only think 5 years ahead of time, but they plan 5 years ahead of time. Think about this. I mean, I closed the calculator, but I don't know if I can pull up another one. Yeah, I'll pull up another calculator. Give me a second. So, this is the difference between just thinking in 5 years and like really doing the math. So, if I'm at $700 a month right now, times 12, that's 1 year. Now, this money is going back in. So, $8,000 in dividend funds is then going to pay out another 800. The difference is I'm still working. All this money is going back in. So that's why these quick and dirty calculations. So this is 1 year. If I stopped everything right now, then I'll do times, oops, what was that, 8,000? Okay, clear, clear, clear. $700 a month times 12 months, and then let's do times 5 years. So this doesn't even account for the compound growth, but if I stopped buying anything else right now, which I'm not, and I just let this run, in 5 years, it will have generated $40,000. Once you understand that, like that's that's thinking 5 year timeline. Obviously, if we multiply it by 2, now we're talking about 10 year, but even the 5 year is so hard for people to think what's going to happen if I do this strategy for an entire 5 years. You understand? So not only being like, well, why would I do this if it's only going to generate even like $4,000 a year from now? That doesn't seem like a lot. But once you say, what is this going to do for me in 5 years? Let's say you have kids and you want to send them to college. Like, all I have to do is do this for 5 years. And now that's generated $42,000, which then I am putting back into this. So instead of $700 a month, it's going to be up to $1,200 a month. Let's do times 12, and now let's do times 5. Now $70,000 in 5 years, plus the $40,000. When people say, oh, I'm investing for a long-term perspective, these are like the numbers that they're looking at, and it does start small. But it's like not doing it is what gets you. That's why every time I think of just buying something, I have to think about it in comparison to, well, what if I instead buy one of these awesome funds, XPAY, JBBB, SPYT, QQQI. What if instead I buy one of these and I wait? I'm a little more patient and I can still go buy that widget, that little thing that I want, but I'm going to put it off for now and instead do something for my 5-year future, my 10-year future, especially trips. When it comes to like trips and concerts and stuff like that, I mean, by not doing a lot of that stuff and just being patient and putting money into these stocks, these funds, well, now it's generating $700 a month that I'm not spending, and all I have to do is turn off the drip. Drip is when it automatically buys back in. You think I can't go to pretty much any concert that I want to now? I don't have to think, oh man, I need to work extra hours at work to do the things I want. Now, it's $700 a month just coming in passively from doing this. That's the difference between saying, oh, I want to go to this trip. I want to spend $1,000, going to Costa Rica or wherever people go. Instead, putting it into these funds and letting the passive income grow. Instead of going to all these concerts, spending $1,000 in a couple months on all that, I buy these funds, wait a little while, have some patience, don't have TikTok brain, wait a little while, let these yields speak for themselves. Now, if I do nothing else, it's making me $700 a month. Now I can go to any concert that I want to. I don't even have to think about it. You understand? Okay, let's finish this up. It destroys the income versus wealth illusion. Most people trap themselves by working for a salary while accumulating liabilities, things that cost them money. Starting this strategy immediately shifts your focus from how much you earn at work to how much income producing soldiers you deploy. I don't know why ChatGPT picked the war thing, but whatever. I have right now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. What do I have? 14 different funds I can buy at any time that I really like, that are bringing money back in. They're all like working for me. How it radically changes your life later in life. Nice, ChatGPT. True financial freedom. The ultimate goal of the rich dad, poor dad philosophy is to have your asset income exceed your living expenses. When your monthly dividend checks cover your housing, food, travel, working becomes entirely optional. So yeah, I'm saying, well, I could spend $700 a month on vacations or concerts, whatever people do. Well, in reality, what we actually want to do, if we want to get to either a job that we like more, or like this is saying, actually covering my housing costs, covering my food, my car payment. Once this dividend is covering that, then I'm no longer just surviving. I'm doing what I want by choice. That's ultimate goal. Ultimate inflation shield. Yeah, we're beating inflation by a ton. Cash in the bank loses purchasing power every year. High quality dividend paying companies that increase their payouts beats inflation. Later in life, your passive income stream. Like, I know we're all in different positions in life, but I do believe if you work on this, everybody knows like gas has been going up so much. It's terrible. Well, like, it is annoying, but I have like a secret going on. Even though gas is going up, my dividends are going up faster. And that's why I'm less worried about the future. Like, you don't have to be as worried. Like, chill out for a couple years, buy some income producing assets, and then next time gas goes up, see how more chill you are. Later in life, passive income streams naturally adjust upward, protecting your lifestyle without draining your principal. That is exactly right. Now I don't have to sell the principal. All I need is this dividend. And it's working. It's going up and to the right. Unprecedented peace of mind. Relying solely on a pension, 401k liquidation. So if you're new, learn about this. I mean, regular stock strategies, you hope the stocks go up enough so that you can sell them at a higher price in the future to cover these expenses. I don't have to sell anything. I only need the dividends. I don't have to sell the stocks and hope that they're up. Relying solely on a pension, 401k liquidations, or Social Security leaves you at the mercy of market timing and policy changes. A robust dividend portfolio, meaning we do need to diversify. That's why we have funds like JBBB and JAAA. They have lower payouts, but they're extremely, they're very secure, right? They're less, very, very low risk. So in order to be diversified, we have to have low risk um, positions. A robust dividend portfolio keeps your principal intact. You live off the dividends without having to chop down the tree by selling shares. Generational wealth transfer. When you build a portfolio of cash producing assets, you create a legacy that outlives you. You can pass the portfolio down to your children or a cause you care about, ensuring they receive a continuous stream of income without ever needing to touch the underlying wealth. Yeah, I mean, there's a difference between passing on to, like they say, even like a nonprofit or something. There's a difference between passing on a lump sum of money and hoping people can like handle it versus saying, I'm passing on a paycheck to you. It's essentially what you're saying, your children or something, right? Instead of saying, well, here's $1 million and you're young, I hope you can figure out what to do with it. Instead, we can say, here is an income to allow you to do something you're more passionate about. And that's much more empowering than saying, here's $1 million, don't blow it. Instead, say, here's $5,000 a month. Now you can go help people, or you can do your passion because you're not saying, I'm only doing this just because you need a paycheck. I'll read this one again. You can pass the portfolio down to your children or a cause you care about, ensuring they receive a continuous stream of income without ever needing to touch the underlying wealth. Core takeaway: your job feeds you today, but your assets feed you tomorrow. By purchasing dividend paying assets now, you're systematically replacing human labor with capital labor. Just going towards that freedom. It takes time. It's not a get rich quick scheme, that's for sure. For me, just even tracking this, making these videos, like, it's not like, there's way more popular channels that are like professionally done, but even just tracking this and trying to share like how this works with other people like is helping me keep it going and to get, as this grows, making little targets, hopefully inspire someone else to at least start investing. And again, it's not the only strategy. It can be great to buy other big stocks you hear about, just the S&P 500 or Microsoft, Amazon, whatever. I mean, this channel's just kind of focused on this stuff. There's lots of people that think if you start this type of investing too young, you're missing out on a lot. And just investing is risky. So you can get advice from all sorts of different places. But at the least, I think if you do this at least to get the ball rolling, if I can inspire someone who is never going to invest for their future to then do it, then maybe it'll help somebody. Okay, well, this went pretty long. That's the update, and I'll give another update soon when the month ends and see, how close we get to $800 a month. I think we're well on our way to $800 a month, and I don't know what we're gonna do when we hit 1,000. It's gonna be a big celebration or whatever. So thanks for being here.